Hi, welcome to this video today. In today's video, we're going to be looking at becoming a successful Forex trader. Now, what do the top traders do differently to the vast majority of losers? I picked out 10 characteristics that separate them from the majority. Now, in terms of the 10 tips I'm going to give in this video, the characteristics of top traders, you can adopt them and you can win if you wish to do so. Now, we're going to go through them in just a moment, but just before we do so, if you wish, obviously subscribe to our YouTube channel. You can also subscribe to our free mailing list on the link beneath this video, and we will send you the best in terms of Forex education, psychology tips, the best strategies that work, and the best trade setups weekly. Now, what we're going to do is we're going to go through the 10 tips. I've just written them up on a storyboard, so let's take a look at them and go through them in more detail. Right, let's go through the 10 personality traits of successful traders. Now, in terms of point number one, they have a high self-esteem. They're supremely self-confident. In their minds, they know they're going to win. Now, that's not arrogance. That's just basically seeing the Forex markets as something that you can make consistent profits from if you do the right things. If you think about it, if you trade Forex, you only need a fairly simple strategy. Well, anyone can learn one of those. Emotional control. You see a lot of videos on how to control your emotions. It's the demise of most traders. That's true. But who can't learn emotional control if they want to? Anyone can, okay? Also, another point that goes in the mix is that you need to have a contrary view to the majority, but that's a learned skill as well. When you see the Forex markets, what they really are, then you know you can win, okay? Obviously, you've got to do your homework, but that's a good point for new beginners coming in the markets. I think most traders are beaten before they start because they don't really have a high self-esteem. They don't deep down believe they can do it for themselves, okay? So, really critical point. Any successful trader is always optimistic. They're never pessimistic, okay? You see a lot of traders when they trade, they get frustrated, they get down, they get stressed. That doesn't happen to the best traders. They're optimistic and unstressed because they're realistic about the markets. They know what is realistic in terms of profit potential against drawdown. They know that markets can be flat for long periods of time and give them losses for a month or 2 or 3 months even. Beginners coming in the markets, they get really frustrated with that. It's part of the game. So the top traders are really long-term goal oriented. They measure their performance not over months, but over years, okay? Now, any top trader has a rigid framework of rules which they do not break. Now, in terms of any strategy that's going to win, you've obviously got to cut losses, run profits. Everyone's heard that well-worn bit of investment wisdom. And you need to wait for a high odds opportunity, so be patient. Top traders have rigid framework of rules in to make sure they adhere to those principles, okay? A really good tip comes from hedge fund Jim Leitner. He said, I have my strategy, I follow it, I know it's going to win longer term. And he said that in his 20 years of trading, his wife never knows when he's had a bad day or a good day. Okay, so very emotionally controlled, obviously, which is what we all need to be at all times. Now, in terms of the rigid framework of rules and discipline, it deals with Mark Douglas' limitless trading problem. Now, in terms of what is that, Douglas makes the point that, the markets are limitless. In many professions, for example, they have a start and end. You're a computer engineer, what do? You basically have to fix a computer, you follow certain steps, you reach an end game, okay? You know what you need to do. It's the same in sport, you know the rules of the game, you know how long it lasts, you know what you need to do to win in the time period. Forex trading, or any trading, presents a different problem. You need to start the game and you need to finish the game, okay? Now, this is difficult for a lot of traders, and even you see a lot of successful traders fall for the temptation of fear of missing out, and this time it's different. Now, in terms of limitless, obviously, you need to have a stop loss that limits your losses. But you also, I think it's the more difficult problem. You need to decide when to take profit, okay, or lock it in. I think that's really difficult for most traders, much more difficult than taking losses. Yeah, the really top traders know when the market looks at its easiest, it's at its most dangerous, okay? So they have no temptation in terms of fear of missing out. And I think fear of missing out really comes, when there's a big profitable trend that looks like it's never going to end. You see a lot of, and goes for professional traders, will pile in with too much risk, okay, or right at the top of a bullish trend or the bottom of a bearish trend, and say, well, this time it's different. Many hedge funds have been wiped out doing that. They've been successful for a good while. Okay, I can remember actually one of the great traders for a really long period of time was Richard Dennis, and he suddenly blew up his trading account. He fell for this time. It's different. You see it all the time. Okay, so there is never any deviation from the rules. Okay, this leads on to point number 5. Right, point number 5, markets are random in the short term. They can just go anywhere. Okay, now in terms of this, we're just thinking in terms of probabilities, not certainties. And it's very important that we get a good EP, expected payout, against our risk. We need the risk to be small, the expected payout to be high. As Paul Tudor Jones, on the great traders all time, once said, I like to trade with a 5-to-1 risk to reward. I can get 4 trades wrong, 1 right, I'm even, 2 right, I'm well in profit. Now, most traders do not understand how to calculate an expected payout. The risk to reward is not what you think. It's got to be based on some logic of market action. Now, we've done plenty of videos on getting good expected payouts against risk, which you can check out. Now, if you're always looking for a high expected payout against risk, you won't be tempted, for example, to jump in to a big trend that's, say, in motion. You might think it's going to run further, but you can't get the stop right against the reward, so you just pass it by. Okay, if you always keep expected payouts in mind, it will focus you on the really, really good trades at the right time. Okay, now introspection, all traders who are successful look within. They know their strengths, they know their weaknesses, and they build their strategy to maximize their strengths and minimize their weaknesses. And I read a great article from a hedge fund manager called Steve Clark. Actually, it was an interview in the book The Hedge Fund Market Wizards, again by Jack Schwager. And he said, we all have things that we're good at, things that we're bad at. When you're dealing with the Forex markets, you need to build your strategy, really to maximize strengths, minimize weaknesses. So, for example, with me, I just have no problem taking losses. That's not a problem for me. So, also, I'm impatient. Okay, so I like to go for turning points in the market. Now, if I'm going for turning points, I've always got a low risk against a high reward. In my strategy, my major weakness is basically I find it incredibly difficult to hold profits. So I have to build something in to the strategy to make me hold the profits. Now, everyone probably who watches my videos knows how I do this. You can see it in the weekly market forecast. So I'm overcoming my weaknesses and maximizing my strengths. Now, point number 7, pretty obvious. You need to have a variant perception and a contrary way of thinking. You're not going to get anywhere in the Forex markets trading with a comfortable view with the majority longer term. And this leads to Bernard Baruch's lesson. It's actually a quote. He actually said the markets are designed to fool 90% of people 90% of the time. They are. It all looks obvious after the event. Now, in terms of becoming a contrary trader and getting a variant perception, we've got plenty of videos on how to do this. The actual phrase variant perception comes from Michael Stiegelmeier, who's top hedge fund manager. He was again interviewed by Jack Schwager in the book The Market Wizards. Okay, so look up that article, our videos. You need to get used to thinking against the crowd, being a little bit uncomfortable, being on your own, thinking out the box for yourself. It's a learned skill. Okay, it takes a little bit of time, but you can do it. Understand SOTF, survival of the fittest, and strategies are not static. They're not. Okay, a lot of traders think their strategy will just continue to work. This doesn't happen. Okay, in terms of, if I was looking at strategies that were used when I first started in the late 80s, they won't work today. There's not enough volatility. In terms of our strategy, we had to change it in 2008 when the volatility really dropped in the markets. We've had to change it more recently in terms of your high frequency traders who are trying to pick retail traders' stops. A lot of noise in the markets. That has to come in to the equation. So you're making subtle changes and tweaks to your strategy in line with the market conditions. Okay, you're always learning in FX. I believe you're always learning in life. Paul Tudor Jones said you have to have an incredible thirst for knowledge to be a successful trader. Charlie Munger said he spends the majority of his time reading books, as does Warren Buffett. Now, all traders who are successful, and Charlie Munger made this point, do read. They're always learning. Obviously I read extensively. So I'll probably try and read a book a week. If you just get one tip or maybe a couple of tips from what you're reading, that can help you improve in what is a very tough game. The difference between big profits and marginal profits, it's a margin, it's a thin margin. Okay, so if it's a psychology tip you get from a book, or maybe a money management tip, whatever, you could incorporate it in your strategy. Also, I think if you read, it does keep you motivated, it does keep you inspired as well. Okay, now in terms of the final point, FX, life, money and balance, you do find a lot of people, and you see this in YouTube videos, they see Forex as some sort of battle with the market. I'm going to sit down at a trading screen, take money from the market, or they've got some system they say can beat the market. It's not true. The market's all powerful. It'll do what it wants, when it wants. It doesn't care about you or your positions. You've got to treat it with respect. You can make money from it, but it's a dangerous animal. Okay. Now, in terms of money, Ed Thorpe, another of the great traders, said, a lot of traders get obsessed with Forex trading, obsessed with money. They're never going to win longer term. If you see a lot of traders who have a kind of Forex addiction, they just can't leave it alone. They just lose. Okay, you've got to have a balance. The great traders enjoy what they do. Any successful trader has to enjoy what they do, and Forex is not for everyone. It isn't a confrontational kind of game. Most of the time it's pretty boring. It can get you frustrated if you let it. Okay, so you've got to treat it in the right way. So it's a great profession, but you need a life outside of Forex. It's not all about trading, so there is a balance. Okay, they're the 10 tips. Anyone can learn them if they wish. If you learn them, practice them, you can become a winning Forex trader, in my view. Right, that is the video of today. Thanks for watching it. Take care and have a good day.